If you're tired of complicated strategies or feeling overwhelmed at a market open, then this video is for you. So no more guessing or being lost at the charts, because by the end of this video you will have clear rules and you will know exactly what you need to do on the chart to execute profitable trades. So make sure to stick till the end and let's actually get into it. So before we actually get into the video, I want to show you my actual results of the past month, which was February of 2026. So you can see I made in total almost $30,000 with a win rate of 85.7%, and you can see right here all of my winning days and all of my winning weeks, and you can see also the loss that I actually took. And here is my average PNL for the day, and you can see I had one loss and all the other wins right here. So now that you actually know that I'm not talking about something that I don't actually know, you can see that I actually made money with a thing that I'm actually going to show you today. So let's right now finally get into it. So of course, before we actually start with the video, we have to have some kind of goals in mind. So the first goal is to understand the market. So you need to understand what is making the market move certain directions and why is it actually going to respect our strategy and why is it going to be profitable with this model. Second thing is to have one logical strategy. So we don't want to trade multiple models because that will just completely confuse us. So what you learn in this video is the only thing that you will actually be applying to the charts. And one more goal is also going to be to easily avoid many losses. By the end of today's video, you will understand what is market actually doing and respecting and how is it moving. You will have one logical strategy that you will go by, and you are going to easily avoid a lot of losses in the market. So the first thing we need to understand is actually what is controlling the market. Not actually controlling, but we want to know what is actually going to show us where the market is headed. So there is something that is actually going to show us where the market is headed, and it's pretty simple. The answer is imbalances or the fair value gaps. And now I'm going to give you the best and the most logical answer ever and explanation why is this so true. So for example, we can see right here the fair value gap is a space in between these three candlesticks. So you can see from the first candlestick's high to the third candlestick's low, we have a imbalance, which is just a kind of hole in the market. And why is it so good, and why is market going to retest it, and how is it going to tell us where the market is headed? You can see how the market came back into it and just bounced off. And why does it want to actually come back into it? It is because this right here is called an imbalance, and we want to see it retested in the market. Why do we want to see it retested? Because here there was a large spike of buyers in the market. So market institutions, market banks jumped into the market right here, pushed market to the upside really fast. And why does the market actually want to come back to this spot? Because market knows that at this point right here there is huge amount of buyers sitting at this level. So if we come back to this level where the market spiked to the upside, we know that there is going to be again a lot of buyers in the market who are ready to buy the market as soon as we get into this fair value gap. And what is going to happen? We are just going to push the market to the upside like this. Then also when we come into it again later, what happened, as you can see, we just kind of swept this low, got into it, and what happened? Those same buyers that were right here kind of just pushed the market to the upside again. And also we have one right here, and you can see how these two are holding the market, which means market is bullish at the moment, or we can call it that it's making bullish structure because it's making structure to the upside. As you can see how this one actually got respected. So how do we actually look if they got respected or not? We just look at the body. So if the body, which is this part of the candle right here, if the body actually closes below this fair value gap, we don't assume that it's respected anymore, but we assume that it's disrespected. And I'm going to show that perfectly to you right now, because if we look at this fair value gap right here that was created, and we ask the question, why did this one actually got disrespected? That is because right here we actually disrespected this body, and what we did is we went and swept the next low. So this is something that you will see a lot in the market. I'm going to show you the second example. So this is the second example. When we retested this bullish fair value gap right here, which is a fair value gap that was made while going to the upside, what actually happened? We left this fair value gap right here and we closed with a body above it. What did we do? Market actually went to the upside and cleared this high right here. So why did it clear this high? Because there is a lot of stop losses and a lot of liquidity right here. I'm gonna get to liquidity later on. But right now what's important is for you to understand when the fair value gaps get disrespected, they kind of just tell us where the market is getting headed. So when we see a disrespect of the fair value gap like this, a huge chance is that the market is going to actually go towards the next liquidity point, which is a high or the low. In this case, since we disrespected this fair value gap that should push the market to the downside, it is this high. Then we have one more example right here. You can see we came down, retested this fair value gap, so we respected it, and then after that we went to the upside, closed above this bearish fair value gap, and that means that we are going to go to the next high. So this is going to be really important for us, especially for the entry later on. But it is important for you to see how the market is actually either respecting or disrespecting fair value gaps. So right now when you look at the markets, you can just analyze what kind of fair value gaps are we respecting. Are they bullish or bearish fair value gaps? And then you just kind of build a picture to either if the market is going to the upside or if it is going to the downside. So it's really simple. And now on to the actual big question, which is what strategy are we actually going to use? And the strategy is going to be really simple. It is going to be based off of the first candlestick in the market open. So right now I'm going to give you a choice to either pick one of those. So you can either pick first 5-minute candle of the market open or the first 50-minute candle of the market open. Me personally, I like the 50-minute much more because it gives us just a nicer and cleaner range that we can actually, trade off of. But you can also choose 5. But in this video, I'm going to focus mainly on the 50-minute time frame. So this right here is the candle that opened at 9:30. So 9:30, and this is a 50-minute candle, which means this candle has lasted from 9:30 to 9:45, and this is the range we got. So all we do is when we got the first 50-minute candle in the market open, we mark out the low and the high. So we take the wicks and we mark out high and we mark out low, and that's it. So that is the first step. After we waited to 9:45 and the first 50-minute of the market open has made the first candle and closed it, we mark out the high and the low. And the next step, I just want to give you some kind of insight on why we are going to wait for it. So the point is, we are going to wait for the sweep either of the upside or the downside. And why is that? Because you need to understand something in the market, and that is that market is always going to hunt lows and highs in the market. And why is that? Because at every single high, this one, and this one, there was stop losses. So what I mean by stop losses, I mean that at every single high, there is stop losses from somebody shorting the market, and at every single low, which is this one right here that just got swept by the market open, and of course this one right here, there is going to be a lot of stop losses from people longing the market. So there's going to be a lot of people that longed the market when we respected this fair value gap to the upside. And where do they put their stop losses? At this low. So market is always going to hunt the stop losses of retail traders, which of course, as we know, like 95 to 99% of retail traders are actually going to lose money. One good thing for us is that it's really predictable where their stop losses are going to be at, which is highs and lows. So all we are going to do in the market is go by the logical side of waiting for low to be swept, and then after that to high to be swept, or the other way around. So high to be swept and then low to be swept. But the point is, we are going to wait for a specific entry model, which is based off the fair value gaps that I just learned you, and it's going to be so smart that it's just going to give us a setup when it's actually going to win, and it's not going to give us a setup when it's going to lose. So when the market is going to give us opportunity to actually catch a move, we are going to get a setup, and when the market does not actually want to go for another side, which is a sweep of one and then sweep of another, we are just not going to get an entry. So that's what I'm actually going to show you later on the actual live chart. But right now, when we actually got the sweep of the downside like this, what do we actually wait for? We wait for a entry that I'm going to show you on the live chart. And what do? We just target to the upside. So really simple. So right now I'm about to go to actual live chart. So also before I actually do that, if you like the video, if you learned something new, and if you want to see more of these videos, make sure to like, and subscribe to the channel. So subscribing, you're just going to see every single video that I actually post, and that just makes me know that I'm kind of doing something right for the community. So let's actually go to the live chart example. Okay, so here we are at the actual live example. So the first thing, of course, that we need to note is that we are at 9:30 a.m. So you can see right here is the market open. So the market open is about to happen in 1 minute. The second thing that we need to know is that we go on the right time frame. So as I said, I'm going to go to the 50-minute time frame. So when I go to 50-minute time frame, the point is for us to, from the market open, just to wait 50 minutes. So if I wait the 50 minutes, this is what a market open did. So this is the first candle. If I go back to 1 minute chart, you can see that we have came from 9:30 to right here 9:44, which is the 9:45. So if I go back to 50-minute time frame and I mark out the low of the range and I mark out the high of the range like this, all that I need to do is right now scale to the 1 minute time frame and wait for the sweep of one side. And let's actually see which side is gonna get swept first. So you can see that the upside actually got swept right after the candle closure. So all we do right now is we need to mark out the latest fair value gap, but there is going to be one key thing that we need to worry about, and I'm actually going to remove this so it doesn't make any noise. So what we want to do is short the market. How do we short it? We short it when the market actually disrespects a fair value gap. But we need to worry about one thing. So you can see that this is the last fair value gap that we created, but we also have a fair value gap right below it. So what we don't want to do, if the market actually closes, you know, like this, and actually comes really close or actually taps into the next fair value gap, we do not want to short the market still, because we have loads of fair value gaps that can actually, you know, bounce the price back to the upside and make us lose. Or we can go until here and bounce back to the upside because there is another fair value gap. So we need to wait for when one fair value gap is kind of separated from all the other fair value gaps. So if I fast forward the market, you can see that we inversed few, but we are still inside of this big one. So all we are waiting for is to get a nice fair value gap presented in the markets. So let's see if that is going to happen. Okay, so we now have the thing that we waited for, which is a really good fair value gap that is far away from all the other fair value gaps. So you can see how right here we have tons of fair value gap in a row, but right now this is the only fair value gap in this whole range right here. So all we wait right now is for it to get disrespected towards the downside. What we do is we enter the market targeting the opposite side. So let's see if that actually happens. So there it is. So all we do right now, we market execute right there on the closure of the candle, so it needs to close. And what we do is we put a stop loss above the candle or above the fair value gap. I like to put it above the candle like this to give it some kind of room. And what do? We target towards the downside. And as you can see right here, the risk to reward is almost 5, which is just abnormal. And let's actually see what happens. So it looks like we are going straight to the TP, made a little pullback and just hit the TP perfectly. So if I want to add something about this win right here, $100,000 funded account, which is very easily achievable, you would have made with 1% risk almost $5,000, so $4,800 in such a short span of time. So honestly, there is no need to show more of these setups because they're just so simple to find. It's just waiting for one side to get swept and looking for an entry towards another side. And I honestly hope that you enjoyed the video and learned something new. Make sure to like, share and subscribe the video. And also one more thing, if you maybe want to get mentored by me one-on-one, so yes, one-on-one, so make sure to go down there and check out if you can even book a call with me, because maybe all the spots are already taken. So with all of that being said, I'm just gonna see you in the next video. Peace.